Let's get to some significant developments in the U.S.-China trade deal. The South China Morning Post reporting that China's vice premier will visit Washington, D.C. and sign the Phase 1 agreement this week. This coming after White House trade advisor Peter Navarro telling Fox News earlier that the deal will likely be signed within the next week or so. Joining us now is Hank Smith. He's co-chief investment officer at the Haverford Trust Company. And Hank, when you take a look at the back and forth that we're seeing between the U.S. and China when it comes to trade, the one thing that stuck out to me so far this year is that the market has largely shrugged off a lot of this uncertainty. What do you think? Do you think that that will actually continue into 2020?
Well, look, I think the market has really been focusing on what matters for long-term returns, and that is low inflation, low interest rates, growing economy, growing earnings, balance sheets. Hey, this is what matters for stock returns, and it's ignored a lot of the news. But let's get this trade deal done and signed. I mean, as you said, the back and forth has just been nauseating. But I think the markets have come to realize that trade is not going to be the headwind that it was in late 18 and throughout much of 19, particularly for the economy. And I think that's a good thing.
And we've had multiple record highs in the month of December, a very strong rally in the markets throughout the whole year. We had the Dow up over 20%, as well as the S&P and the NASDAQ. When you take a look at what could happen heading into 2020, are you expecting any profit taking?
Well, first of all, the market's due for a correction. We've gone over a year now without a 10% pullback, and corrections are a normal and healthy process in any bull market. And it would make sense that there's some profit taking with some of these big blue chips that have really done extraordinarily well. Apple, for example, but nothing can stop Apple right now. The stock was off 4 or 5 points early in the morning, and now it's trading up. But I think that we've been counseling our clients to temper their expectations for returns next year, because clearly this market has bought into some of the positives that we see developing in 2020.
So you're telling your clients to temper some of their expectations, but when you're figuring out where to invest when it comes to next year, where are you finding some value?
Well, look, I think we're still in a very healthy economy, but it's still growing below average. Even though we expect the economy to pick up to maybe 2.5%, it's still below long-term trend of 3%. So we're saying a balance between offense and defense, have some exposure to cyclicals, economically sensitive areas like industrials, basic material, tech to a certain extent, financials, but also to healthcare on the defensive side, consumer staples, really on the defense. And also some international exposure. The U.S. still looks like it is the best house in the neighborhood, but in terms of valuation, you can't ignore how attractive emerging markets are. And even Europe is cheaper than the U.S.
Anywhere specifically within emerging markets? Because we know emerging markets have largely underperformed in this past decade, really, going back to 2010 all the way up to where we are now. So do you expect that momentum to shift then if you're favoring emerging markets going forward?
So we use index-based ETFs to capture our emerging market exposure, and we do not try and cherry pick which countries or regions are going to be the out or underperformers there. And you're absolutely right. This decade, they have been underperformers. The prior decade, they were massively outperformers, and emerging markets either tend to be at the at the front of the performance derby or at the absolute bottom, and usually never in the middle. And so you have to be willing to take that kind of volatility. But over the long term, better growth rates, better economic growth rates, and a secular trend of a development of a middle class. That's what's really exciting about emerging markets.
All right, Hank Smith, we'll leave it there. Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.